Welcome back, everyone. So I know it's not quite the end of the year just yet, but 'tis the season, I guess, for looking back at this year and seeing what went well, what went not so well. So today's video, I thought I would look at all the stocks that I talked about this year in the Stocks I'm Buying series of videos and discuss their fate. Do I still own them? What happened? What happened before, after, during? And I think there's a few interesting little anecdotes here, so we'll see how it goes. So before I start, I just want to note that after all the craziness and volatility, it actually turned out to be a decent year. It's not always like this. There was some luck involved and some taking risks at the right time. But again, there's different years, different results. Prior years, more mixed results. And again, not investment advice. So what I did here is I put on every stock the price as of the close of the day that I published the video. I don't remember if I published in the morning or at night or day before or whatever, but I put the close as of, or the price as of the close that day. And just for fun, at the end I'll look at a mock portfolio with all of the things and the results. So the first of these videos I made was on February 12th. Now, obviously, in hindsight, not the greatest time to be buying stocks. You could have bought almost anything a month later, much cheaper. But at the time, I was looking at the markets as, things have already taken a good hit. There's some deals to be had. I thought, uh, you know, what happened in China, what happened in the markets there, how it's recovering, how it's looking. And I was thinking, to get worse from here, people need to start like really panicking, and it's hard to predict when people are going to panic, what people are going to panic about. And I was just looking at the whole situation like, how badly could we possibly handle this? Because we have to handle this like the worst possible way for it to get, significantly worse. And are we really going to do that? And at the time, one of the stocks I bought was Arc Coal. Now, Arc Coal died. Now, I'm just kidding because they changed their name to Arc Resources because I guess coal has a negative name, especially when they're dealing with metallurgical coal, which is used in steel making, which they are. But still, I bought this at 50, or I mean, so the rules of the thing are I will give you the price at the close of the day before this or the day of this. So 56.89. Why did I think it was a good idea then? I thought it was a good idea because they were very low cost. It looks not great now. It's lower now, but I was looking at it like, I still think it's going to be a winner. And at the time, I was thinking, prices could go lower, but I don't think they're really going to impair themselves too much. With a low cost position, they should be able to make money throughout the cycle. They won't impair themselves. And yet they did. Now it isn't the end of the world, but basically they issued some converts lower. Not great. It's different from the other name that'll show up on this list. Don't really want to get into that. I've already spoken about this one more than I anticipated. But I think that now, I mean, you had the steel take off, you had iron ore do better. I think this will should follow in the coming time. But I still own it. Next, Global Atomic. Okay, so at this point, Global Atomic, 47 cents Canadian, this is. I was looking at it like, okay, for this to get significant, for me to be concerned about what happens here, you'd need some crazy cocktail. You'd need zinc prices to implode from low to super low. You'd need Turkish low-cost steel industry to basically slow down immensely, you'd need capital and debt markets to close. That's not going to happen. I mean, there's no reason for that to happen, right? Anyway, this was because, yes, they were not super high on cash at the time, but I was thinking, they could, worst case, they need a bit of money to advance the project. They could take out some debt. They have cash flow. They won't need to issue shares unless, there's zinc price collapses at the perfectly wrong time. And then even then, they would still need to have management decide to push forward no matter the market. You needed like 2 or 3 things to go terribly wrong, and you got like all of them. Now, did they end up permanently impairing at the wrong time? No. But for a while there, it was looking like a possibility. And that's why when it kind of bounced back and they did a small raise, very small, didn't really change the grand scheme of things, is why I don't know, thought it was acceptable because of all the craziness that kind of had to go wrong and did, and still they kind of avoided the big a big impairment. But anyway, of course, I still own this one. So yeah. Next was Dynacore. What an adventure this was. It's bought that day it was 174. It went up to 190, down to $1, up to like 230, and back down to 180 something. That's cyclicals for you. That's an adventure. Still growth at a reasonable price, very decent dividend considering the sector, very low payout ratio. They're ramping up and adding a second facility, increased margins at higher prices. Still own this one. And yeah, it's for those purposes of tracking, I still own this one. Okay, so between February 12th and May 16th, it was a very mentally taxing period because there were some amazing prices in the markets, and it was clear that at some point this is an opportunity to buy some stocks and have them go up multiples. However, they would just fall even faster. And so every time I obviously got very bullish, and there was a lot of squeezing the portfolio and twisting and trying to if something that I was watching was low risk before, maybe something else falls through the floor and all of a sudden just becomes a much more interesting thing. I was doing tons of looking at companies for like days on days, and it got very, very mentally taxing. So the strategy that I came to was to buy a small group of high quality cyclical names in different sectors, because I didn't know which one was going to recover first. I thought they would all recover. And so I was aiming for 3 to 5x in high quality names at the time. Now, the 3 that I came out with at the time were the following. So one of them was Linamar. Linamar, they make auto parts mainly, along with manufacturing a number of niche machinery. And this is a company that had a fantastic track record of growth, still do. Through multiple downturns, they often seem to come out stronger, and they have big free cash flow. At the time, their balance sheet was maybe a B minus, so not not an A plus, but not a F by any means. So I figured they'll make it through, and when things recover, Linamar is going to be around, and they're going to continue to be a great company. So that was my thinking of the time. Obviously, I still own it. It was it didn't recover. I mean, everything recovered at a different pace, but this one you'll see again later. I was surprised that it didn't recover more quicker, but it's a great company, and so I mean, I still own. And yeah. Next was Stelco, and this was another one of my higher conviction ideas. The problem with Stelco, I mean, when I was, I mean, at least at the peak of things going poorly, was that it was just dropping so quickly. It was terrifying to look at buying. When I spoke about it, the price was $6.19. Steel didn't recover immediately, and there were many theses that took off before steel, but I think this one has made up for it, and I was hoping that it would because it was really, really priced cheaply. Now, when I look at it today, I'm frankly a bit surprised that it's done very well, but I'm frankly surprised. I feel like it should be 25 to 30 bucks a share. When you look at the long term, what their cost should be, what the price, long term mid cycle price, it should be there, frankly. Maybe it's just a not yet thing, but you look back a few years, they were at the last cycle, peak of the last mini cycle, I guess. They were 25 bucks a share approximately. And what have they done since then? Reline, so at a lower cost. Cogen, lower costs. Next, we're going to work on coking, lower cost. Add 10% to capacity. Add an option. It's better. Did they issue equity? Nope. So realistically, I mean, I think this is a company that has proven that they can add value in tough times, and that's why I really liked it, and that's why I really like it. Now, I'm, it's gone very well, and I'm very thankful for that, but I still think it should be $25 to $30 in mid-cycle. And now, the third one I mentioned was my lower, not conviction, but lower excitement idea. And of course, it was the one that worked seemingly most flashy and most quickly. So, that's how it goes sometimes. That's why I bought a basket. Anyway, West Fraser, lumber, timber. Apparently, when the world shuts down, everyone decides to become a carpenter. I didn't predict that. It's a bit surprising. There were some supportive fundamentals in the lumber industry, and it recovered first. Now, I said when I disclosed that I got rid of it, and the date I disclosed it, the price would be on the screen, but we're going to chop it down a little bit because that's my actual exit price. But I preferred something else, and I still thought it was going to 90. And, now it's higher than where I got out, and I'm not disappointed because, I preferred the other thing, and I'm not, it went well. Anyway, yeah, so this decent cycle took profit. There wasn't an immense amount of leverage in this position, but no one ever went broke taking profits. So for a while after that, it was seeing what happens, what bounces back, how are things looking like they're going to shape up, what's the best thing, what has reacted too soon, and really shifting some money from stuff that was, nice win very quickly to something that should still be a good thing to buy, but may need some more time. And a few other assorted theses. And heading into August, the market was still iffy. I mean, it still is to a large degree. The market, people are still concerned about what comes next, wave two, whatever. And so in August, these are a few of the things that I said I was buying. So one was Treveli. Now, I said at the time that I thought that the zinc market would be tight enough so that it would support the price. Now, this proved to be an all right pick, but it didn't really, there were a few things that went better than I was expecting, and this pick didn't really show that up. Then recently, didn't really like a few of the decisions, and so closed out the position. I disclosed this before. But looking at how would I do this next time if I wanted to do the same thing, I think I would literally pick better. I would pick a higher quality company. I would go with some less leverage. I mean, I still think that this probably should have done a bit better than it did, but in the end, less good. Another company that I said I was buying at the time was Methanex. Now, this would have probably been a good one to buy in the exact panic because it was kind of the type of thing that I was looking for. I didn't buy it then, I swapped out into it later, but a lot of leverage, energy exposure, but not in the oil price storm, war, whatever you want to call it, that was happening there. But it did get crushed with everything. Again, this was a smaller position, but it still has a lot of leverage to higher energy prices. I think it'll be good. Is good to be downstream in the recovery, meaning having the product closest to consumer rather than closest to source material. So they recovered first, but this is one, back to sleep, waiting on hopefully it'll prove out to be even better. Okay, the other thing I said in that video, I figured I'd address it here even though I didn't give names. I mentioned that there were a few higher risk uranium names that I didn't mention because I didn't really, they were higher risk and there were small positions, didn't really want to, I guess I didn't feel comfortable mentioning them, and that should have been the signal. Now, that was, uranium had run up a bit, and I did make this video after a bit of a run up, and I hadn't indeed bought them necessarily that day that I made the thing, but I will be completely honest. The results on this one from that day, of the three that I mentioned, they're quite mixed. One was terrible. One was, flat to within a tick, up or down. And the other has done pretty well. Depends where you're measuring it from or measuring it to. But the point is, that was not the greatest point to be adding to uranium on that specific middle of August time. But again, uranium does sort of move in slow motion, and so I'm not really too concerned. I think at least two of them should be decent winners, and the third, you take risks. Sometimes it works, sometimes it does not. And thus far it has not, but it may. And this takes us to almost recently at this point, in November. Well, I guess I made most of these buys in October. But, we're starting to get to a point where you can kind of potentially maybe see the light in the distance, the light at the end of the tunnel. So I'm kind of starting to look at that at this point. Now, the market has stopped being, not stopped being concerned, but it was terrified. It was scared for many months, and that is kind of lessening at this point because, again, it sort of seems like many people are looking at potentially a light at the end of the tunnel into early next year. So the three stocks I added at this point were, now one was Verde Agritech. When I spoke about this, price about 65, it's still basically, compared to either success or failure, it's basically flat. I don't really consider this to be that different from there. Maybe I own a bit too much of this one. Maybe I'm overly anxious. It'll probably take longer. I'm definitely a bit early, but I think it has proven out some of the big questions. Will they ever get to a point where they become profitable? Looks like it. Will they become steadily profitable? Looks like it. Meaning the rest is, proving out more on the upside. So part of this comes from part of why I bought more now and why I'm bullish on this one is because I know me, and I think I can be pretty good at waiting on something. What I'm not good at is adding or chasing. Uh, if I were to potentially go something else in the meantime and wait for, it to prove out things, I often would miss because psychologically I remember, oh, when this was this, so maybe it'll go back, and it's psychologically what I can do versus what I'm not good at. And so that's why I'm more content on this in this type of scenario in being early and waiting and hoping that it can prove out what I think it's going to prove out, as opposed to trying to time it more closely based on when do I think that the market's going to start thinking about the next earnings or something like that. The next thing was Linamar. So we went from May to October, and Linamar, the stock only went up, I guess, what's this, $12? I mean, don't get me wrong, that's a decent percentage. But when I was looking at it when I bought it back in the second quarter, I guess, early second quarter, I was looking at this as a $80 to $90 stock. I had another look in, I don't know, Q2, Q3, probably Q3, around when I made the video. I look through my stocks, something not going well, something going well, and, first place that I may want to add is some of the companies that I thought were already a good idea. And that's what I saw here. I made a video about it. I made a video saying industrial that I think will go up 100% by the end of next year. And I still think this was a high conviction idea because I thought I think entering at that point was a very low risk of permanent capital loss. It's a high quality company, as I said before. And I can see how the market might be thinking, okay, it was $40 last year. We had this terrible thing and it's $40 this year. It's like, I understand that line of thought, but in the meantime, they paid off what, 700 million in debt, a billion in debt? For a $3 billion company, that makes a big difference. And, the cycle had troughed, and so it was on the way up. And, the great companies will, you can buy more higher. And that's what I did. I still think it's a great company. I still think after the recent quarter, actually, I think I raised my price target. I mean, I think it's going higher than 80 something by the end of next year, which is what I was talking about. And so, yeah, is it maybe stretched on the upside here? Maybe, but I don't really but I don't really trade based on short-term extensions aside from when it matches my long-term view. Then again, silly me, I increased my cost basis on Global Atomic. I added a little bit to it. One of the better risk rewards in the space, if not the best risk reward in the uranium space, in my view. So I added, and not much more to say. I've talked about the stock way too much. So yeah. So I won't say too much because again, it was only a month since the last video, and this is basically now. Just a few little slight additions to the portfolio. Just wanted to keep things up to date, so I did one of these videos in December. One of the two was Uranium Participation Corp. The price at the time of the video was 405, again Canadian. My cost basis, for being completely honest, was higher on this one for 14, I believe. Don't quote me on that. But anyway, either way, buying uranium for less than 25 bucks, physical uranium without the mining risk, all the other risks, it's a low risk, but the type of thing that is very easy to add value over time and should appreciate. The other one was Melcor Developments. At the time, the price was 810. I think you know that my cost basis is slightly different based on when I was talking about it, but it doesn't matter. This is an oil real estate hybrid, and it's a cheap dividend paying stock with a little bit of growth and a little bit more cyclicality than many other things, but still, it's, the value investor in me looks at this and says, cheap stock. How cheap? Unclear specifically, but should it get better? Is there a catalyst for it getting better? I believe so. So I think it does well. Now, this is just for fun. I made a Yahoo portfolio of what would happen if 5K, I picked a number at random, was put into each stock each time that it was mentioned on the date, and exited at the time of I mentioned that exited. Now, obviously, not investment advice, and if you could forget about that 1 day gain, because I'm mentally preparing myself already for a retrace in one of the big names specifically that had a big move up. Hopefully it doesn't fully retrace, and hopefully this is start of something bigger, but mental preparing. Anyway, yeah, it was overall not terrible. Overall, decent year. Let's hope that can continue in the future. So after all that, I do want to say that when we're talking about things like this, when we're talking about cyclicals, when we're talking about volatile stocks, there's no wins until the profit is taken. Things can snap back very quickly. Sometimes I hold too long and miss some or too much upside. Sometimes I don't hold long enough and miss some or too much upside. It's a tricky thing to weigh one versus the other. But all of these stocks, many of these stocks are very volatile, so it's trying to manage how extended is it, how likely is a pullback. There are some that are pretty much very extended to the upside, and I'm constantly thinking about that. Now, I do believe that many of these names are cheap enough or high quality enough so that I don't have to stress as much about picking the exact exit point. But many of these, I think, are still fairly cheap. Hopefully, I don't get caught up in holding for too long. But I still think good things are ahead in many. So we'll see in the end. But again, it's still going on and could turn around very quickly, and it could continue. And it's only over once it's either de-risked substantially or profit is taken. And that hasn't happened yet. And that's what happened in 2020 up to this point. I will post on the 31st, I guess, if I remember, a update for the portfolio for this portfolio for the year, and we'll see what next year brings. And hopefully it's less crazy than this year, but hopefully the returns can be as good or better. I keep trying to do better year after year. Sometimes that's hard, sometimes that's easy, but we'll see what next year brings. Until next time, have a great day.